What's going on, guys? It's GBP baby. Welcome to another trade execution video. So I'm just going to give you some context of the actual trade position because I didn't actually speak in the video, so it will be quite sped up, but I'm just going to give you some context as to what's what. So we were going to start on the monthly. We were trading euro dollar. We went short, and what I'd have marked out is this consequent encroachment of this wick, which is the midpoint. So what you'll see is that I had this marked out, and then if we drop down to the daily, you'll see that today we actually traded up to that consequent encroachment, and that's where we got the reaction that I was able to short from. So if we drop down to the 4 hour, we can have a better look. You'll see we traded higher, traded right into that consequent encroachment, and then we had this large reaction to the downside. Now the position that you're about to watch, is in the trade execution you're about to watch, is this candle here on the hourly. This move from this level here right down towards these lows. We actually made this high at 4 AM during the London session. That was high of the day. We then moved lower during New York, pulled back on ourselves during New York as well, and then as we ran into the London close, we then traded back lower, which is what I got in on. So what I'm going to just quickly do is I'm going to show you all the reference points that you're going to be seeing in the actual charts. What you'll see is you'll see a grey box from here to here, and that's because I saw this level. This here is basically the original consolidation. Why is this an original consolidation? Because you can see we have a lot of back and forth price action before sweeping out those highs, trading into that monthly consequent encroachment, and then aggressively trading lower. I had marked out this breakout because it's the last gap, it's the last down close candle before the up move that then caused the move lower. So what you'll notice in the actual trading execution video, which is about to start, is you'll see a blue box, I believe, with a line delineated in the middle of it, and you'll see how we traded right up to that, and that's where my positions were entered. So I hope you guys enjoy the video, and as we go through it, I might be stopping every now and then just to talk through the actual execution itself. But you can see we filled this fair value gap. We had a bearish bias because we traded to this consequent encroachment beautifully too. Look at that rejection, and yeah, the fact that we filled in this range, I then anticipated a continuation of downside delivery, and this breaker obviously acted correctly, as in we respected the 50% level. It was the last hourly down close candle before the up move, and then we break lower. So I hope you guys enjoy the video. Peace. So you'll notice that I position my stop loss above the swing high, and that's because I no longer expect price to be trading above that swing high. And the reason for that is because, one, remember at the beginning of the video I showed you that breaker where that blue line that's resting above my positions, that blue line should continue to get respected because it's 50% of the breaker block. So there's that reason. And then furthermore, you'll also notice that that swing high where the stop loss is positioned is also taken out a short-term swing high already. So again, there's no reason for price to need to reach back up there if we are going to be trading lower. So you'll see that I moved my stop loss again pretty much to break even, and that's because you'll see that we've taken out another set of swing lows that was on the buy side of the curve. So price is continuously defending levels, and as it's doing this, and as it's you know stepping down each time, it means that we can trail our stop loss lower because the same reason as the breaker, price shouldn't need to reach back above these highs now because we've taken out a certain level of sell side liquidity, and it's showing a willingness to want to go lower. So if price was to then reach above where my new stop loss is, it would mean something completely different and would simply be on the wrong side of the market, which is why I was confident that I could place it and move it there. So here you'll see that I've marked an eye out at the 50% level of the range, and that's because I wanted to bring our attention to the 50% level of the range that we're anticipating to get traded to. So you'll see how I just exited half of my position at the 50% level, and that is simply just to pay myself. As a trader, ICT always preaches, make sure you pay yourself, and that's why at 50% of the range I always make sure to take off some of my position. And then that means that I'm one, paid, and two, now my stop loss is at break even. So I've already won basically, and that puts me in a nice secure position to hold on to the rest of the trade without any worries, without any stress, and to feel confident about the trade execution as a whole. So you'll see I move my stop loss one more time, and that's simply because, remember that grey box that's highlighted above, that is a breaker on the higher time frame, right? And you can see that we've now closed below it with a quite an aggressive move lower. So I no longer expect price to even want to think about going back inside that box until we grab this outside liquidity. So that means that fair value gap at the 25% level of the range, I don't really want to see that get traded to, which is why I can now move my stop loss there, and that means my stop loss is now in profit. So here you'll see me take another partial, and that's because we're at the 75% level. We've taken out another level of sell side liquidity, and yeah, again paying the trader, and it again puts us in a comfortable position where we can continue to hold. You'll also notice that I keep referring to dollar, and that's simply to make sure that dollar is still showing a willingness to want to go higher. Here I mark out a fair value gap, which is an imbalance that I can see dollar wanting to trade towards, and so long as dollar keeps moving towards that, I'm confident in my position on euro to be moving lower, as you can see. You'll also see that I have moved my stop loss lower, and this time it's above this swing high, and that's because again we've taken out sell stops. There's a willingness to want to go lower, and that red box highlights an inversion fair value gap, meaning that price should continue to reject away from that, and if price does manage to reach up there, it means something completely different, and at that point I would want my stop to get taken. So here I take another partial inside of the fair value gap, and I move my stop loss one more time down to another swing high that I don't anticipate price to want to trade above. And the reason I can move my stop loss so closely is because price shouldn't press higher at this point. If it's going to run out that sell side liquidity, it should run to it, because we've taken out now that 75% level of the range. So if it's going to reverse, it will reverse now. It's basically the reason I'm allowing myself to push the stop loss so much lower. And as you can see, I do actually get stopped out in this trade, but once we get there, I'll explain how we handled it. So here we can see a market shift. As you can see, we've taken out a short-term swing high, and you can see that price is running higher back through an inversion fair value gap towards now my stop. Now obviously it doesn't matter because our stop was in a lot of profit, so that's not a problem, but it's the trade management and understanding that price doesn't always run straight to this outside liquidity that can allow us to avoid these mistakes in the future. So as you can see here, I believe is where my stop actually gets reached for. And to be honest, as soon as that little short-term swing high got taken out, I was pretty confident that it was likely going to trade into the stop, especially considering how dollar was also moving aggressively lower after trading through into that fair value gap. So I believe now is where it gets taken. But look at how price is finding support back on top of that inversion fair value gap. So we traded on the downside, and then on the upside, and now we've come back down to it and found support on top of it. So it's going to use that as a springboard in order to trade up higher and probably run towards equilibrium. And I believe we have it right there, and that's when our stop gets taken. So thank you for watching, guys. I hope you learned something, and I'll catch you in the next one. Peace.